Hey, today I'm here with Beau Eckstein, and we're going to talk about a little bit more about USDA loans versus SBA loans. Hey, Beau.
Hello, let's go.
All right. So why do rural hotels get declined by SBA lenders?
They don't always get declined, but a lot of lenders are picky, right? Because they use prudent lending, and it's in a not a large MSA. It's a small rural area, and they're generally higher default rates, and that's sometimes why we would use a different loan product like a B&I loan. Every lender has a little bit different appetite, but in rural markets, sometimes the USDA is the right loan product to go with.
So what makes a USDA B&I loan a better fit for hospitality, for example?
First of all, loan amount. We can go up to 25 million. We can also stack in, if it's in an eligible area, a lot of times you'll see CPACE in the capital stack, meaning you can bring in CPACE. So you could stack in and do these larger projects. And actually USDA has other loan products like the community facility program where you can do $100 million deal. So, it's a kind of an underutilized financing tool. When now more and more banks are catching on, and they're beginning to realize that rural America needs this more than anybody. And one is it's a lucrative thing for banks, of course, like anything, they got to make money, but it's also really good for the economy and to grow these communities. You think when you're driving, just imagine, back when you lived in California, Bill, you're driving from Northern California to Washington or wherever, and you think about all those rural truck stops and gas stations. They need to get funded somewhere, and USDA B&I is a great resource for that.
Very good. Can I lease a hotel that I buy with a USDA B&I loan to a third-party manager and still qualify?
Yes, you can. Unlike SBA, where you got to be more involved in the management, that is definitely an option that you don't. Some of those caveats with SBA don't apply with USDA.
Awesome. What are the loan terms typically, and how long can I stretch them out with a B&I loan?
It's generally up to 30 years. I've seen that they can go as long as 40 years, but I believe that majority of the lenders that are selling the guaranteed portion, because most of these lenders sell off the guaranteed portion, they're going to want to write 30-year paper. So 30-year loan, and it could have a fixed rate component for 5, 7, 10. That could be negotiated depending on the level. Same thing with the prepayment penalty. It's going to be negotiated depending on the deal, depending on the risk factors, and ultimately who's going to fund the deal.
Cool. For a USDA B&I loan, do I actually need to live in the area to get funded?
No, I mean, if it's a makes sense deal and you're a good borrower, the sponsorship ownership team has the credentials and basically the same things to qualify from an SBA underwriting standpoint. It is a little bit longer process to do USDA, but in these rural markets where you're doing a big manufacturing plant, a biodiesel facility, like you're not really going to be able to finance these that easily. So USDA comes in and really promotes growth and job opportunities in markets that would probably not have it otherwise.
Meet Beau Eckstein, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.